Ladies and gentlemen, K Kim here. I hope you guys had a good day trading today. Market is S&P 500 is pretty much flat, 0.01% down today. Looks like we initially gapped up and thrived for an hour or so, and then started declining here, and we're back where we started. So last night we talked about this moving average here. So we talked about how we saw that the prior resistance acting as new support, and today, coming to the market this morning, we saw initial gap up. We saw market moving higher, and then looks like we found resistance here. Let's see. Yeah, in that vicinity, and pulling back. So yesterday I gave you these levels of 277, 276. We're not there yet. That moving average that you're seeing here, that did act as support on the 22nd, which is yesterday, and we did see that initial move to the upside, and looks like we're now down and retested, right? So we're still at that level. That moving average is slightly, moving sideways. No, it's not. It doesn't really appear to be inclining, but looks more like flattening out a little bit as the price comes down. And look like on the last hour, we saw selling there towards that hour, pretty much evaporating the gain or the bounce that we came. So it looks like we did have some selling pressure on the last hour. And if we do see a continuation tomorrow, like tomorrow's Friday, so the first level is 277 as a support. That's the level that where we found support here and here, and that's the level where it gapped up. So that gap area is going to be an important level to see if we're going to find support in that vicinity tomorrow. And then that longer term moving average right here, and we've been talking about that, and that's the level we're seeing that residing in that 276 level, which I gave you there, another support level at 276, which is the same level with their longer term moving average. Again, we talked about how longer term moving average did act as strong support in the past. This was back in April 1st and 2nd, here April 21st, and we're just in that vicinity. And that's the vicinity where we have the gap area also, right? So this is where we said, so that gap still remains open. And keep in mind, if you've been following my weekend videos, and we talked about even back in late March and like early April, right? Late March, early April, we talked about how the longer these gaps stay open, the better it is going to be for the buyers. And I know a lot of bears are probably expecting to see these gap filled. At this point, I think because we have the cultivation of higher lows here, so we do have uptrend development going on. I guess for that to happen, we would need to see bears first filling this gap. And we talked about it yesterday. For the bears, you really want to see this thing coming down fast and hard. You want to see this thing pulling back, maybe retesting this vicinity here at 277, 276, and gapping it down, basically completely avoiding this entire gap, because there's a lot of support there. And that's the argument. That's going to be the argument for the buyers, right? So buyers' argument is this: well, we have the prior rising pivot, and that's a pretty strong support. That's a pretty strong pivot. It's been acting as either resistance or support back to back pretty much since early March. And now it's almost end of April. So it's been like, month and a half. And on top of that, we have these higher lows cultivation happening. We also got the longer term moving average rising there. And we already have these two gaps here. Again, these gaps, they're going to act as support. So bears, a lot of times bear doesn't want to fizzling around. They don't want a consolidation. They don't want a sideways move. They don't want a grinding movement, right? And when you start to see markets slowing down, like you start to see market moving sideways, that's what bulls are doing. Because the longer the bulls kind of floating around, right? And you can kind of see how they're like floating around, right? And this is what really making bears very, very uncomfortable because they want to see these things just coming down hard. No fizzling around, man. No playing around. Let's just break this thing down, flush it down. That's what bears want to see. So when you see market fizzling around and hanging around, holding up, consolidating up and down in a smaller movement like this, that's as far as like maybe looking at things more of a minor to intermediate term, that's what bulls are doing. They're slowing things down because we've seen some severe selling events or activities throughout the March. So right now we are witnessing the character of this market have changed compared to what happened in March. And I think a lot of bears are looking for something like that to return. I think that's why, I think there's still a lot of fear, right? I mean, I think it's fair to say that there's still a lot of fear because even bulls are probably fearing that we may see another shenanigan moves like we see in March. So for that to happen, at least, for that to start, you want to maybe see bears coming it down, gapping it down. The reason why the gapping it down is really important, so that way bears don't have to deal with, cultivating, sideways move or, grinding move or finding support. Because if bulls come down, fill this gap, well, that's going to act as support. And that's the level when we already have that prior pivot, right? That rising pivot. And we have the long-term moving average here and here. So trying to just come down and feel it and somehow trying to bring it down, that's going to take too long. Bears don't like that. That's bulls. That's how bulls like to operate things. Bears don't like that. So if you're a bear and you want this thing to just flush it down hard, you want bears come back down, attack this gap, fill this gap, come back down to even 230. Well, I can't say that that's what's going to happen next week, but you want to see something like that, at least, chance of that happening, maybe turn this into an island top. We talked about that yesterday. That would be the best bet. But if bears coming down and just trying to fill this gap, trying to kind of, fizzle down, well, there are too many supports. There are too many support. We got support at 277. Not to mention, this here, we're just right at it. Right? We're just right. Unless we see a gap down tomorrow or continuation. Let's say if we market gaps up. Let's just say market gapped up like this on Friday. Let's just say we did that. That moving average is going to be slightly rising. Again, like that. So bears don't want to see a gap up tomorrow. Right? Bears want to see a continuation. And there are too many supports. We got 277, we got 276, we got that longer term moving average, and we have that rising pivot. There are too many supports just trying to break this thing down. For bears to really speed it up, they need to gap it down to avoid all of this. For bulls, if you cannot defend this area, it looks like bears really trying to break this moving average here. Unless bulls can gap it up tomorrow, make this moving average start to get back up. If not, then 277 is going to be a next support to watch. If we lose that, we got the 276.60 on Spider. And that's the level we're seeing that is colliding, coinciding with the longer term moving average that did act as support here, April 21st. And we talked about here in April 3rd. And that's a strong support. Let's say bears were managed to break 277 and break 2760 and break that longer term moving average, right? Well, and then the next thing is they want to come and fill this gap, entirety of it. Once the gap gets filled, that's going to act as support, which is at 272, right? Let's annotate that. And then in that vicinity, we have that rising pivot also. So there's a crap load of support that bears have to go through. And it's going to be a lot of work. And those levels for sure going to act as support. Unless, we see a huge gap down on Friday and see a flush. The best way, though, for the bears will be come down, fizzle a little bit, and then next day gap it down, turn to island top. If that happens, and the bears have to gap it down. The sellers have to gap it down below this rising pivot and below this gap here, somewhere at 270, 272 or something like that. Then probably going to see a huge downside day on that day. Once we see something like that, then maybe at that time you say, you know what, maybe bears are really gunning for this gap right here, 256. Until then, I want to remain in a bullish posture in the minor term. Bullish posture in the minor term. I want to give benefit of the doubt to the buyers in a minor term until we see some of these strong supports break down, right? Let's kind of get a quick look at this oscillator, because we've been checking out this oscillator for some time, ever since Wednesday or something like that, because you can see that's the level where we found support right here. That was that over sold level. We did see a pretty strong bounce up, but we are getting into that kind of oscillator resistance here. You can see that that was a level where we initially saw bounce, we pull back, we saw bounce, we pull back, and we're right at the level. And I can also look at that as like lower highs on these oscillators and lower lows here, and we're right at that. Let's put a little bit of line there, and let's see how that looked either tomorrow or Monday. So the daily update is gonna be. It's going to be the last time for this week today, because tomorrow's Friday, so I'm going to be doing the market update. Market update, I got a lot of positions I have to go through. I'm going to be looking at daily charts, so I may not have time to look at this 65-minute, but I'll annotate this for now, and we'll look at it either Monday. If I have time tomorrow, I'll do it, but if I don't, if I forget, then we'll just have to look at it on Monday. So let's see if this thing's going to come down like this on Friday and Monday, or are we going to maybe fizzle and then start to go up higher? We'll find out, and I'll give you guys an update on this for sure Monday, and we'll go from there. You guys enjoy your evening, and good luck trading tomorrow.